Good morning and welcome back to the Daily Hunt for Multibaggers. It's Friday, April 10th, 2026, and we're wrapping up a fascinating week of market insights.
That's right, Ethan. Yesterday's data, collected on April 9th, certainly kept our AI busy. We saw a considerable volume of online discussions, flagging a good number of different stocks across various sectors.
And the market sentiment? It's really a mixed bag out there. Some truly promising growth stories, especially in AI, but also some significant cautionary tales emerging from the discussions.
Absolutely. Our AI-generated insights are highlighting both high-potential plays and some very high-risk situations that demand our attention. Let's dive right in.
First up today, Reddit, or RDDT. Our AI picked up a strongly bullish sentiment, with one major investor planning to significantly increase their holdings, even eyeing a $400 price target. With nearly 70% revenue growth and positive insider buying, it's certainly showing some compelling growth potential. The talk around AI data deals and global expansion is a real upside.
Well, Ethan, while that growth is certainly eye-catching, we have to look at the KPIs. RDDT's PE ratio is over 55, indicating significant growth expectations are already baked into the price. Its beta is 2.4, so it's highly volatile. It's also seen a sharp correction from its 52-week high of 282 to its current price of 138, showing the risk involved. There are legal challenges and critical upcoming earnings to consider. It was a cautious buy last week, and our AI is keeping it there. So for RDDT, our verdict is to investigate as a cautious buy. Let's move to AMD. We previously had it oscillating between stay away and cautious buy.
And now an upgrade to a buy from our AI. Sentiment is leaning slightly bullish, especially with the community downplaying Amazon CEO's comments about selling AI chips. AMD is playing a central role in UA-Link 2.0, and we're seeing news about gigawatt mega deals. Plus, insiders have been purchasing a solid 6.77% of shares. That's a strong vote of confidence.
It is, but that PE ratio is still very high at 88, reflecting those high growth expectations. The beta is also high at 1.96, meaning it can swing significantly. However, the strong revenue growth of 34% and those insider purchases do indicate fundamental strength and internal conviction. For AMD, our AI analysis suggests a buy.
Next, let's look at NBIS, Nebulous Group. The community sentiment is absolutely exploding with optimism here, Brooke. People are talking moon, calling it a 10xer, celebrating huge past gains, and there's chatter about an insane $49 billion backlog. Jim Cramer even endorsed it.
Ethan, that sounds like pure speculative fervor. Our AI is flagging major concerns despite the community excitement. NBIS has an astronomical PE ratio of over 1,200. That's priced for perfection, and then some. Its operating margin is negative, and earnings per share are minuscule. It's not profitable from core operations. And despite all the hype, insiders are actually net sellers. This is a classic case where sentiment and fundamentals diverge sharply. For NBIS, our AI suggests you stay away. Now, a stock we haven't rated before, Intuit Inc. The recent community discussions have been overwhelmingly bearish, citing fears that AI, specifically tools like Claude, could disrupt their tax preparation business.
Yeah, users are really questioning the future of TurboTax, especially with so many readily available free alternatives and AI's increasing capabilities. They're feeling like Intuit's business model is cooked.
And the KPIs certainly reflect market concern. The stock is currently near its 52-week high, having dropped over 55% from its peak. Most tellingly, insiders have been net sellers of over 7% of their shares in the last 6 months. That's a significant red flag. While historical revenue growth is decent at 17%, that's past performance. The future challenges are clear. Our AI's first verdict for Intuit is to stay away.
All right, let's talk about AMZN, Amazon.com. This one is consistently strong. We saw posts celebrating significant short-term gains, and the general sentiment is hugely bullish. With Amazon's AI chip business and AWS AI revenue surging, analysts are sounding positive, and importantly, insiders have purchased over 1.1 million shares in recent months.
Amazon remains a juggernaut. For a company of its size, 13.6% revenue growth is truly impressive. While the PE ratio of 32.58 might seem high, the robust growth in AWS and AI services, coupled with strong insider buying, justifies this valuation. The stock is also trading closer to its 52-week high, reflecting consistent market momentum. Amazon remains a buy.
Speaking of consistent strength, Microsoft continues to shine. Our AI highlights their groundbreaking multi-mode collaboration deep research agent, integrating top AI models. This solidifies their AI leadership, and predictions for the stock are soaring towards 800 by 2030. They boast strong revenue growth and incredible profit margins.
Indeed, Microsoft's net profit margin is exceptional at 39%, and revenue growth is 16.7%. The PE ratio of 23.34 is quite reasonable for a tech leader driving such innovation. While there was a slight net insider selling, it's a tiny fraction of shares. Microsoft's strategic AI initiatives are poised to boost future KPIs. Microsoft remains a buy.
And Google, Alphabet, also remains a strong contender. They're hinting at an exciting new AI-integrated health wearable, expanding into a huge new market. They're a critical cloud provider for advanced AI models, and with 18% revenue growth and 32% net profit margin, their fundamentals are rock solid. Plus, insiders have been net buyers of 1.55% of shares.
Yes, Google continues to execute well. A PE of 29.15 reflects investor confidence in its growth trajectory. The insider buying is a powerful signal. While the market might be skeptical of general AI hype, Google's deep foundational investments and strategic product launches like the hinted wearable have the potential to further enhance its strong revenue and profit figures. Google remains a buy. Finally, let's discuss Intel. Our AI previously classified it as a cautious buy.
But there's been such a dramatic turnaround. It's gone from dead money to a hot stock, up 225% in a year. The repurchase of a significant plant stake signals improved cash flow, and their expanded AI partnership with Google is huge for future demand.
Ethan, that's exactly the kind of hype that worries me. The stock is now trading at its 52-week high, meaning much of that optimism is already priced in. Critically, Intel's revenue growth is negative, its net profit margin is negative, and its EPS is negative. The fundamentals haven't caught up to the excitement. While the long-term potential is there if the AI strategy pays off, buying at the peak of a rally with negative core financials is highly risky. Our AI is now downgrading Intel to stay away. We also saw chatter around CoreWeave, CRWV, Forward Air, FWRD, and Ursa Invasiones, IRS, which due to similar fundamental concerns like extreme debt and unprofitability, or in the case of IRS, highly contradictory KPIs compared to the user discussion, are also classified by our AI as stay away. Investigate as buy. Advanced Micro Devices, AMD, Alphabet Inc., GOOG, Amazon.com, AMZN, Microsoft Corporation, MSFT. Investigate as cautious buy. Reddit Inc., RDDT. Investigate as speculative gamble. Nebulous Group NV, NBIS.
And that brings us to the end of today's analysis.
Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for joining us on the Daily Hunt for Multibaggers. We'll catch you next time.